Hi everyone, this is Nadine again. Welcome to my channel. Today's video I would like to talk about custodial platforms for cryptocurrencies. Please give me a like so it helps with the YouTube algorithm, and also subscribe to my channel if you want to hear more about topics like this. So yeah, let's get into it. So when you own crypto, the major challenge that everyone has is that still to buy any goods in the real world, you will need fiat currency like US dollars, euros, Swiss francs, because unfortunately, right now at the level of the current adoption, you can't buy most things with cryptocurrencies. Hopefully that will change in the future. But yeah, right now you will have to convert it somehow. And at least in the US, the problem you face is that you will pay capital gains tax. And in the US, if it's a short-term capital gains tax, it's actually pretty high. It's based on income, but it can be up to 37%. If it's long-term capital gains tax, it's up to like 15, 20%. But it's still quite a bit of money that you have to pay when you convert it. And that you will have to pay that if you do that on an exchange. If you go to Coinbase or Binance and you convert your Bitcoin into US dollars, you will have to pay like a high percentage in taxes because the exchange will report it. So how can you avoid paying those large taxes? Well, there are custodial platforms. And what's cool about those platforms is that you can actually take a US dollar loan against your crypto. So then it's actually a loan, which is a non-taxable event, and you can get your crypto out into US dollars almost free. Not quite, because we get into that in a minute. So there are several different platforms out there that you can use. And usually how it works is that you can deposit your crypto on the platform, and they allow you to take out a loan in US dollars while your cryptocurrency serves as collateral. Mostly you will have to deposit about twice as much cryptocurrency than you want to take out in US dollars. So if I want to take out $50,000 in US dollars, I will have to deposit at least 100,000 in Bitcoin or in Ethereum. Mostly you can actually use any type of crypto, or there are several options on the platform. So one platform that you see here on the screen is BlockFi. I've used it myself before, and they have different options. It's actually kind of funny, like I used this platform about a year ago, and it's kind of funny because when I Googled it or like pulled up the website now, I noticed that there was not really a mention about earning interest much or borrowing against your crypto. I mean, it says earn, but there is nothing major about interest rates, which was quite different about a year ago. And you will see in a minute why that's probably the case. So on BlockFi, like many other custodial platforms, you can deposit Bitcoin, Ethereum. They have also several options, gold-pegged cryptocurrency, and you can quite easily just take out a loan in US dollars. The process on BlockFi is quite long or slow. Like they take about 5 business days to actually pay out your crypto. It's all, I think, a manual process, and so it's quite it's kind of slow. So I moved on to another platform, which is called Nexo. You can see that here, and also here, how it's presented is much different than a year ago. And yeah, you see why in a minute. But yeah, here you can see you have different options. You can buy, exchange, and then borrow. And when you go to that, they present it here as 0% APR. This is not quite true because they have these different levels. So Nexo has actually their own Nexo token. So depending on how much Nexo you own, you can have better interest deals, essentially. But yeah, Nexo, I used also myself, and it's quite a simple process. What you have to do, you deposit your crypto. And what's nice about Nexo is that they allow you to use even your collateral to pay back your loan. So on BlockFi, it's a little bit more, you have to like email them, and it's not an automatic process. But on Nexo, actually, you can just have your collateral, let's say 50,000 in Bitcoin or Ethereum. They actually conglomerate like everything that you have on the platform. That's so it doesn't matter which coin, like obviously only the coins they offer for the platform, but it's about 20 different or even more. And it doesn't matter like where your money in which coin, like it just takes the total, and it gives you mostly like about 50% is then your credit option. So I deposit 20,000 in Bitcoin, 30,000 in Ethereum, and 10,000 in ADA, and then I can take out a loan, because that's about a total of 60,000. You can take out a loan of like 30,000 in US dollars. You can also take out loans in another cryptocurrency. But yeah, for the purpose of actually getting your US dollars at a low tax, you can use the US dollar option. I think they even allow other fiat currencies as well. I obviously haven't tried that out. But yeah, so you just deposit it, then you can press a few buttons, and there are tons of videos out there that explain how to do it, so I'm not going to go into that. Yeah, you press a button. You want to take out the amount of the loan that you want to take out. You get a few emails. You will have to submit documentation from where your crypto stems from. So if you have like crypto that has been all over the place, the easiest thing that I found is just to put it first, always on the same exchange, and then move it onto Nexo. Because otherwise you have to get to all these different exchanges and get those deposit and withdrawal emails and so on. So the easiest is just to move it first to one exchange and then to Nexo, and then you basically can just show your transaction record or history from the exchange, and they'll probably will be fine with that. And yeah, then it takes about a day to approve it, and then it's basically just money transfer, a regular bank transfer time that you will get your money. So it's like a day or two, depending on when, or it's not on the weekend, but like, so yeah, yeah, it's a pretty simple process. What I also liked about Nexo is that at least they claim it. Obviously, we don't know what they do in the background, but they claim that they move most of the funds actually out of the platform into a cold storage, which means that they have a wallet or multiple wallets that are disconnected from the internet, which is good, because if that's really the case, it's not that easy to hack them. So they have they limit how much they can lose. Because yeah, if you have it in a hot wallet constantly, if they get hacked, they could lose all their funds. So it seems they have a little bit of a security there. It's not completely automatic. It's still sort of manual. So also that gives me a little bit more confidence that the money is secure. And they're also one of those custodial platforms that did not over leverage, which is kind of nice. And I'll talk about a few others that it's the opposite the case in a minute. Yeah, so I really like Nexo, but in recent weeks, months, there have been quite a few issues with these custodial platforms. Because remember, we were like floating around with Bitcoin at a price like 40-ish. And then quite quickly, it sort of crashed down to like 20,000. And so these platforms heavily rely on people depositing their money just for earning interest. BlockFi, Nexo, and many other custodial platforms have pretty nice deals how much interest they pay you for depositing their money. And obviously, but they also pay out loans. So the juggle they do is having people depositing it and then paying out loans to other people, which is a problem when you have a huge price difference in the cryptocurrency field. Like if they, promise you loans in US, like at a certain US dollar value, and then the crypto they have on the platform basically halves in price, they have an issue, especially when people get scared and withdraw their crypto. Then they all of a sudden, they are over leveraged and they might like run into real problems, which you might have heard about is actually the case with Celsius. That's the website that that's what popped up when I opened the Celsius the Celsius website. So this pop-up says, this site is under construction in light of Celsius and certain of its affiliates having filed voluntary petitions of Chapter 11 bankruptcy relief. As such, many services and features are not available at this time. For general information, please visit this website. So I'm not going to talk about the actual website that they are linking to, but yeah, so Celsius actually ran in this problem. They were hugely over leveraged. They paid out huge interest and profits to their clients, and what happened is that they had to file bankruptcy. And you will find so many videos on YouTube about people that lost all their money because they were not able to withdraw it anymore. And they're trying to be nice and kind of come up with any solutions. They're talking about like creating a mining farm and pay out their clients through the profits of the mining. But we know mining is at the moment also not at a good place. So yeah, it's quite an issue. Same happened a little bit earlier than Celsius with Voyager. Also here you have a nice pop-up. This website is undergoing updates as we move through a voluntary restructuring process and work to restore services on our mobile and web platforms. For the latest information on Voyager restructuring, blah, 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 blah. So yeah, it's kind of, yeah. So if you use custodial platforms, you should really look into what the history is of those platforms, how long they have been around. And yeah, you don't know, you're gonna be in a little bit of a risk. So I'm not going to really use those platforms to earn interest anymore. Because yeah, the risk of that you have all your crypto on there. At least if you do, don't put all your crypto on there. I personally don't like doing it anymore, even if they pay out like 5% or whatever APR. I rather find other ways to earn interest on my crypto. For example, there are some nice things that you can use, like Tezos, for example, has a delegation option on the ledger Nano, which is like just a regular crypto ledger, which has a lot of supports many cryptocurrencies, including Tezos, and it's very simple to stake or delegate your Tezos, and you will earn about 6% APR on that. So that is pretty nice. There you could, for Ethereum, for example, you can think about joining a staking pool and stuff. So, but yeah, always research well what you're going to do with your crypto if you want to take advantage of some like percentage gains there. briefly, I just want to also mention some platforms that are, so the platforms that I've been talking about are centralized platforms, but there are also decentralized platforms like Qubit. And here also, this didn't go well. And yeah, my husband and I had money on this platform and it essentially disappeared. So it got hacked and basically they got robbed of all their money. And now they restarted the website immediately again, and pretty much like a few weeks later. And now they're trying to pay back their clients. But you see here, total compensation paid is 1,700,000 ish, but that's 2%. So it might take a long time until people see some money again. Yeah, I personally don't like to trust into platforms where there is no company behind, because they can't be held responsible. And it is a little bit, these platforms, I mean, it's a little bit against the decentralization, right? But since, there's a website that's maintained, the smart contracts, even though they're mostly immutable, they are put on by an entity. So it's nice to have, at least if you put your money essentially onto the platform to earn interest. I feel better when there is like a company behind it that is registered. They can be held accountable eventually, and you sort of know like who is behind the platform. This is a little bit against the decentralization idea of crypto, but keep in mind the smart contracts themselves, you can review them, they're transparent. You can look at those, they work independently from the controlling entity or like those that created it. So it's, in that sense, it's still decentralized. But yeah, anytime you want your money to have an easier access and be very convenient, it mostly ends up in being a little bit more centralized than the original idea. But yeah, like you can choose something like a ledger and delegate. So there you're actually choosing from a pool of, for Tesla's example, they're called bakers, so validators. And you choosing from a pool, you're free to move from one validator to another if you don't like what they're doing or if they screw you over or whatever. So that is much more decentralized idea, where it's also the peer-to-peer way of doing things. So it's not like a custodial platform that's centralized and run by a company or like unknown individuals. So yeah, so that's kind of it. So yeah, the conclusion is be very careful when you're using custodial platforms. They are a way of getting your US dollars with very small tax, because you can pay back your loan immediately and you only pay interest for the first month, which is the percentage, it's much smaller, like 4 or 5% maybe, compared to 37% possibly that you might pay on a short-term capital gains tax. So yeah, that's it for today. Thanks for watching my video. Give me a like if this was helpful. Subscribe to my channel if you want to hear more, and I hope to see you soon again. Thank you.